Hello, this is Mike Swanson, and I run the website WallStreetWindow.com. In a few moments, I'm going to have a special interview I'm going to replay with you that I did on the phone with Jordan Roy-Byrne, who runs the website TheDailyGold.com. And I'm saying this is a special interview because Jordan is one of the top gold experts, period. And we're seeing interesting things happen with gold. We saw the price of gold take a dip in June and then stabilize in July in form of resistance level in the 1825 to 1830 range. And this week it tested it yesterday, came down in the afternoon. And at the same time, as I mentioned in my last video, we have positive seasonality on a historical basis going back to the 1970s. Gold has a tendency to correct in the summer and then start to turn up in August. Will that happen again? Well, one of the cross currents in the financial markets is we saw the Dow down yesterday. And if you've been following my videos, you know that we have been tracking the weakening of the internals inside the stock market. And last week, when the market did go up, the rally was really focused in several big cap technology stocks that were reporting earnings that week. In fact, the rally began the week before, and we got into a situation of buy the rumor, sell the news, as traders bid the stocks up into earnings, and then the stocks fell a little bit when they reported. I'm speaking of Amazon, Facebook, Microsoft, Google, and so forth. And that trend has carried over into this week of stocks selling earnings. So we saw it Wednesday after the close. Etsy reported earnings. Etsy crashed. Now, those stocks last week did not crash. They just had down days. Etsy crashed. But one of the differences between Etsy and those stocks is Etsy is extremely highly valued on fundamental metrics such as price to sales ratios, price to earnings ratios, price to books ratios, and the company loses money. And the problem is it's in the ARKK ETF. It's one of the stocks most widely owned on Robinhood. So many people are in it, and many stocks are in this situation that are among the top 100 most widely owned stocks on Robinhood. So can these highly bid up stocks that disappoint or don't meet the sky high expectations people have put into the price, can that derail gold by causing, some turbulence in the financial markets? Well, Jordan has a very interesting take on this question of what impact the stock market could have if it just pulled back a little bit on the price of gold. And what's he think about seasonality? So this is a good time to be talking with him. Again, he runs the website, TheDailyGold.com. And like this video so that I know you want more videos like this, and click the subscribe button if this is the first time you see me on YouTube, and then click the bell right next to it. All that said, now it's time to talk with Jordan Roy-Byrne of TheDailyGold.com. Hey, how you doing today, Jordan?
Hey, Mike, I'm great. Thanks for having me.
Yeah, I'm glad you're able to join me and my listeners because we've been seeing some real interesting action in gold. And you're not someone that's a perma bull, always bullish on gold or always bearish on gold. There's a few of those characters out there too. You're real flexible of what's going on in the markets and the trend and call it as you see it. And, this summer we saw gold drop in June. It seems to have stabilized in July. And it's retested that 1825 to 1830 resistance range. But what do you think can happen from here for the rest of the year?
Well, Mike, I don't see any big move in gold coming unless we have a stock market correction, and that would have to be something that I'd have to say it'd have to be around 15%. If you go back and you look at the last 6 years, interestingly, the three major bottoms in that time in the precious metal sector, they all coincided with the three most significant corrections in the stock market. And if you go back further, you can look at, 2013 to 2015. I don't even think the S&P had a 10% correction during that entire time. And of course, gold had somewhat of a crash in early 2013. And that was the real part of the real severe bear market. So the relationship with precious metals in the stock market, it changes over time, but generally speaking, if the stock market is going up and gold isn't already in a bullish trend at that point and has momentum behind it, then gold is going to struggle. And so we're seeing that, gold's below the long-term moving averages. It's building the handle part of a 9-year long cup and handle pattern. It's now 10 years long, that cup and handle pattern. So very big picture, I think gold is still correcting. It's still going to take some time. And I don't foresee any huge move in gold until we get the next stock market correction. So I'm not talking about a bear market or a 50% collapse or a crash, just like a 15%, 12%, 17%, 15%, something like that in the stock market. If we get that over the coming months, that is going to be the catalyst for gold to make the next leg higher. So that's what I'm waiting for and watching for. If we don't get that in the stock market, then I would think, gold is probably going to go sideways, maybe a little bit lower over the next, 3, 4, or 5 months. And the gold stocks, interestingly, they're still really oversold. So they could rally a little bit more from here. A couple of weeks ago, they got really, really oversold. So that it's kind of a nuanced view, but that's how I see things.
Well, the thing about that is, honestly, I think we could get a stock market correction. We've seen the internals inside the stock market weaken over the past 2 months. The Russell 2000 is doing worse than the S&P 500. That's one easy way to see that. But the cumulative volume of advanced decline line has been declining. The leadership has really narrowed into really a couple big cap tech stocks, and some of the fad stocks are not doing that well. The ARKK ETF is below the 200-day moving average. It's now lagging the market, and that's the type of thing so many people, own that started trading just a year ago, that or the stocks inside of it. So I think we could, easily see some sort of correction before the end of the year. In 2018, as you mentioned, the market declined 20% and gold went up. So it is, in bond yield nothing. The yields keep coming down. That might drive people into gold if the market corrects, because if you're sitting there and you want to get in safety, how much money do you want to put in bonds that trap you for 10 years and you don't even get as much yield as you do off as what the inflation rate is?
Yeah, in my premium service, I want to say 2 or 3 weeks ago, I did an update showing lots of charts of the stock market regarding the internals that you talk about and other breadth indicators. And all of these charts were screaming that, with respect to the stock market, this is a time to be cautious and that a correction was definitely possible. Now, predicting when it could happen, I don't know. It could start tomorrow. It could start in 3 months or 6 months or, 2 months. I don't know. But I think the reason I'm talking about it, Mike, is because I agree with you. I think it's definitely a possibility. It could happen at some point over the coming months. And even if we get that correction and let's say it takes gold down or it takes gold stocks down, they really rebound significantly and really outperform on the other side. So that's an important point to mention, because a lot of people get concerned, well, if the stock market goes down, or my mining stock's going to go down. Even if that happens, history shows that on the other side, gold and the gold stocks will really lead that rebound. So that's why I'm not worried about the short-term moves in this regard.
Well, of course, gold fell like 10% last year when the stock market fell 33%. And that was a drop that was so steep, involving the shutdowns and what was to come, that it shook up the bond market. In 2008, the bond market, speaking of the corporate bond market, got frozen and locked up, and gold fell. And it did that in the fall of 2002. Other people didn't really talk about it in the news. But in 2018, the market fell and gold went up. In 2016 or 2015, gold did okay when the market was dropping, 20%. So what I would suggest is the people that are scared that the stock market crashes gold and mining stocks, I think it does that when there's a debt problem that's driving everything down. And I don't think that's going to happen, here. If the market were to drop, in a correction, I don't think it's going to be associated with, the bond market blowing up, but just stuff so overvalued and crazy, and people are on margin, and you can just get setbacks in those situations.
Yeah, I mean, I agree with you. If we look at, and another point to mention is when gold and gold stocks get hit when the market corrects, usually it's because gold and gold stocks have been going up with the market into that correction / crash, like 2007, 2008, for example. There's other periods. I mean, you could say the very late 70s, the tail end of that move. There's one or two other examples that I can't think of, but yeah, no, I think you're right. That's a good observation. And the other point, I mean, gold and gold stocks have been correcting for more than a year. So a lot of money has come out of precious metals. It's moved into these other areas. So if these other areas correct, why would precious metals correct significantly? They're not. And I mean, putting it all together, I mean, a correction in the stock market, that's what's needed to really get the sector going again. I think it will happen at some point, but again, I can't tell you if it's going to be 1 month, 6 months, or 2 months. But that's what I'm waiting for and watching for at this point.
Yeah. In some ways, maybe as you mentioned, I think at the start, there's not been that much movement one way or the other. I think that's what you said. You don't expect much to actually happen in the very short term. If I remember, that's what you're saying, right?
Yeah, correct. With respect to gold and the gold stocks, I don't see any huge short-term move coming either way.
Well, what's an investor to do in that sort of situation? Look for the best opportunities, or do you see opportunities in the mining sector itself?
Yeah, I see some. I mean, I'm focused on juniors that I think can add significant value over the next couple years. And so I like to say it's fundamental quality. So I'm looking for juniors that I think have the highest combination of fundamental quality and upside potential over the next couple of years. So I'm trying to find the stocks where I think if they're a producer, a developer, they're growing production, or they're going to build a mine that has expansion potential. And if I'm looking at exploration companies, I'm looking at what companies are undervalued, what companies have a chance to really grow their deposits or make discoveries. I think those companies can hold up well during this correction. And at the same time, when the market gets moving again to the upside, these types of companies can, really make huge moves. And so I think those are still ahead of us. So I'm a buy and holder, but at the same time, you have to cut your losses. You can't be sitting on something that goes down 50 or 60%. So that's my strategy right now.
So that, if I'm right, then you really a company specific strategy at the moment.
Yes, exactly right. Yeah. I'm looking at company by company and evaluating that way versus I'm not trying to time the market first and foremost and then apply it to individual companies. I mean, I think timing the market can be extremely difficult. And so with individual companies, I'm focused on, I mean, of course, I look at the chart and the technicals of how those stocks are trading, but I'm focused on what they're doing, and if the metals prices are flat for the next year, which are the companies that can add a lot of value and still receive inflows of capital and buying from investors.
Okay, that makes a lot of sense. Well, I won't keep you much longer. I guess before we go, could you tell people what they can get by going to your website, TheDailyGold.com?
Sure. Go to TheDailyGold.com. I have a lot of free analysis there consisting of podcasts, interviews like these, videos, articles every week. Opt in there at the top, get on my free email list, and you can see more of my free work there over the coming weeks.
Great, and hopefully we'll talk again soon, and something will happen in these markets. It'll be worth getting your feedback on, because it could be a sleepy August.
Sounds good. Thank you, Mike.
Thank you.